In last week's trading, we saw a big win for the bulls, and it's nothing new, as we've seen many wins for the bulls here recently, as the market has actually bounced back, believe it or not, from the lows, somewhere around 25%. That's a pretty incredible bounce in such a short period of time, as markets have kind of digested the idea that the worst of the trade deals is likely not the outcome that we're going to see, and the economy has been holding up relatively okay despite the worries around tariffs. That being said, what did institutions do this past week? Well, when we take a look at the latest COT report, which shows us what institutions have been buying or selling, according to the CFTC, this is not speculation, this is straight up the weekly reported numbers from the CFTC, we get an interesting picture when we take a look specifically at the indices. Take a look at the S&P 500, where they added shorts, and let me just slightly zoom up here. You can see we have the change in short contracts and the change in long contracts. Check this out. They decreased longs in the previous week, and they added into short positioning. What else? Well, let's take a look at the Russell. They increased shorts and increased longs, but not nearly as much as shorts. Take a look at the Dow Jones Industrial Average, and what we can see here is that we did get a slight add in longs, but still more shorts added than longs. And if we also take a look here at, of course, the NASDAQ, we can see they decreased their long positioning and increased shorts. So that is what I mean by, in the title and thumbnail of this video, that institutions sold despite a win for the bulls. So this is where price action can sometimes get us in trouble, because price is showing, a win for the bulls. We broke and closed above, except the institutions actually did some selling in the latest filing. So with that information on our side, let's move forward now and take a holistic view of the indices, and then we'll take a look at commodities and currencies as well to see if there's any trade setups that look good for the week to come. All I ask as we get started here is if you could hit the thumbs up button and subscribe to my channel. I would greatly appreciate it. So if we take a look at the S&P 500, let's talk about price action. So again, the weekly chart, very obviously a bullish week. We did put in a fresh high in terms of a new close on this recent rally. That is yet again another bullish progressive week here. We've kind of broken out of this recent consolidation, and things looked really good on that Friday close. What we can see here is specifically this new close looks really promising for where we are going into the current week. Another key data point from this past week was the NFP report, which did come in better than expected at 139,000 jobs, compared to the forecasted 126,000. This was a good number, and while it wasn't a smash hit, it wasn't like we got like another 175,000 or anything like that, this was still what the market needed to charge higher on Fridays and or on Friday to shrug off that uncertainty around the labor market. Why was that so important? Well, a lot of this market is really pent up on the idea that, tariffs are going to cause a major recession, and it is going to be the triggering event that slows down the economy, cuts into corporate earnings, and stocks are going to fall. That has been the theme for a lot of this market sell-off. In fact, it still is the prevailing consensus. I can show you because we track consensus very closely on this channel. If we take a look at, for example, the AAII Investor Sentiment Survey, which is great for index traders because it shows us respondents' responses to the question, do you think the market is bullish, neutral, or bearish? It's a very simple survey, but it tells us a lot. And what you can see here is that despite the rally that we've seen in stocks, the indices look much better in terms of price action, but sentiment is still pretty bearish on something that historically should lean bullish, right? Most investors, most traders just slightly lean bullish on stocks because, of course, over the long term, they do tend to go up. But we still see a very strong preference from the crowd sentiment to either be neutral or short biased or bearish. So the way I view this is a sentiment indicator that I think actually tells us we have more room to continue to squeeze people who have been on the wrong side of this move. I think that it's very likely, in my opinion, that we are going back to 6,100 and beyond in the S&P 500 especially, and I do really emphasize the E and especially there, if we're talking about trade deals that could come down the pipeline, right? We could see Japan and EU, and once these things start to formulate into kind of concrete plans, the market's going to say, okay, we now know what we're dealing with. We're unlikely to get those massive sweeping tariffs that people were so afraid of, and now we can actually charge higher. Now, is that a certainty? No. There is the possibility that all this trade war stuff is not over, and that all that pessimism that I just showed you in the weekly surveys is valid, and that people are thinking, this is not over, and Trump's going to mess this up, and he's going to, freak out, and he's going to start tweeting at President Xi in China, right? That could still happen. Don't get me wrong. But I think probabilities still favor the upside when we take a look at price action, which is very momentumous. I don't know if that's a word. To the upside, things look really good. We've got higher lows in this chart. We've got fresh highs and a strong closure on Friday outside of this consolidation. So to me, price action favors the upside. And when we take a look at the top setups page, we can look at indices specifically for a second and see that the NASDAQ is currently our highest scoring index. You can see it lost a little bit of its score, and so did the Dow Jones, so did the S&P 500, and wherever Russell is. Yeah, here Russell is as well. You can see they didn't particularly gain any points in our algorithm due to the commitment of traders data coming in pretty soft, pretty bearish for the indices. But this is why when we talk about scoring particular assets within the Edge Finder, we're not making our whole assumption or whole decision based on one column, right? We also want to look at retail positioning, seasonality trends, momentum in the market, GDP statistics, manufacturing PMIs, retail sales. We want to look holistically at the stuff that really moves the markets. Yes, institutions are important, but that's not the only thing we should consider when deciding if we want to buy or sell an asset, in my personal opinion. You do what you want, but this is, my approach is to try and take a holistic view of economic data, technical data, and sentiment data. So in terms of indices, where am I at? Well, I still have this Russell position, and Friday looked amazing. In fact, what I do plan to do on Monday is actually take this stop loss, which is down here, and I'd like to move that right on up here just to lock something in on this trade. Specifically on the 4-hour chart, what we can see here on the Russell 2000, if you're trading futures, it's going to be RTY. If you're trading the ETF version like I am, that's going to be IWM. So IWM so far has been a really good trade for me. Let me show it to you. So here is my IWM position, which is just the iShares Russell 2000 ETF. You can see the trade is up $22,000, which is a pretty incredible return for my account in such a short period of time. So I was able to capture a really good pullback and then the immediate bounce. Now with this past week, as I just got done explaining kind of that high or break of the consolidation zone, things look really good. So I do plan on taking this stop loss, which is still currently there, to actually moving it and trailing it just behind where we sort of back tested and shot through those highs here on the end of the week. So the idea here for me is that we can come back into this area. That's totally fine, but I'll probably just decide to trail out and take profits if this move fails at this level of support. So I do think that the IWM or the Russell 2000 does have more upside from here. I like the trade quite a bit. Like I said, my system is confirming a bullish bias on this one, so that is part of the reason why I took the trade. But I was able to capture that pullback, really like the trade here, and would like to stay in it as long as price action continues to move higher. My plan will be to trail stops and let this winner run. So IWM, that's the Russell 2000. Let's move on now to the dollar index. And up next after this, we'll take a look at gold. But I want to show you something kind of interesting that I've been working on. This is not yet available, but it will be available pretty soon on our website. It is a new kind of heat map for currencies directly for your TradingView.com view. And I think this is really convenient because what it will do is it will kind of show us on a daily chart perspective. And you can do inputs on this. So, we can come in here and we can do our inputs. We can change the time frame. I'm just going to leave it on the daily chart. Wow, you have a lot of options here. I'm just going to leave it on the daily chart, but we can get an idea of specifically the momentum here that we're seeing in the currency market at this time. You can see dollar CAD super bearish across all of our time frames. Dollar in general here, guys, for the most part, is kind of leaning bearish in terms of price action. You can see the euro, the pound, the Australian dollar having some very nice strength against the US dollar on a price action basis. Same thing with the Kiwi dollar as well. And the only thing kind of struggling against the dollar right now is actually the Japanese yen, which we will take a look at in just a second. But let's take a look at some currencies, and then we'll end off with gold, actually. So just a reminder, by the way, if you're enjoying the video, hit the thumbs up button and subscribe. Trying to grow the channel. We're getting close to 500,000 subscribers, which is absolutely crazy, and I really appreciate everybody who watches and supports my videos. It does mean a lot. Okay, so dollar index first, right? So let's take a look here at the DXY and talk about what happened on Friday. So on Friday, we had an NFP report, which helped out the story here, but it's just... Here's the thing, right? We had a lot of data that came out this past week, and I just want to show you where we're at with this. So first of all, on the economic data front, let's take a look at our economic surprise meter. And what we can see here is that we are still getting a pretty ugly view of the US dollar when we talk about economic surprises. Now, I will explain more about what I mean by that. A low score on this meter just means that the economic data has recently been missing expectations, and a high score like the one we're getting for the UK, the British pound, would be an example of one that is producing better than expected numbers for the currency in recent reported data. To extrapolate that further, let's take a look at the U.S. economic heat map. Now, the text in yellow here is going to be things that have reported in the last 7 days. And what you can see here is in the past week, we did get a slight beat on NFP, but there were several things that missed critically this past week. Like, for example, the ADP number, right? That one also came in short. JOLTS job openings was better than expected, but then jobless claims this week was again, that's 2 weeks in a row where that kind of disappointed. Wage growth was strong. That's good for the dollar. Unemployment rate remained flat. That's neutral. Services and manufacturing PMIs were both ugly. And so those were negatives for the dollar. And so when I look at the overall score here, we're still getting a bearish lean when it comes to the US dollar. So when I look at this, it was a nice bounce on Friday for the NFP report, but I think we need more than that. And with CPI and PPI this week, we'll see if that can kind of change the course for the US dollar. But my view would be if you start to get a push higher this week, that the path of least resistance, barring a really hot CPI report, would be for further downside in the US dollar. So I do have a bias going into this week of things like, pound USD, for example, on the long side, if we can pull up our currencies, right? So if I'm looking at the pound dollar, I'd be looking for pullbacks this week, personally for long side continuations of this move. I think that's the path of least resistance, at least at this time, unless something changes. Euro dollar also looks interesting to me on the long side. Dollar yen, very mixed, like I said. When we take a look at the eco surprise meter again here, we can see that the Japanese yen is kind of getting a 50% reading, dollars. So this is kind of a neutral currency pair for me. I think this one's likely to remain range bound, dollar Swiss franc. This one I think also, this one's, both of them are getting weak readings, so going to remain weak or range bound there. Dollar CAD, however, is an interesting one. This one looks bearish to me. You've had just kind of level after level break for the bulls. Can't seem to catch a bounce. And so, we're up now to another major spot here around this 1.3625. I'd be looking for break and retests here, or if we get, some upside in this one, maybe to start fading into this and continuing to short the dollar against the Canadian. So I do like this one to the downside. We'll take a look at the Australian dollar. The Australian dollar looking midway through here. So I'd probably prefer the Kiwi dollar as a possible bullish setup. So if we get some weakness, some pullbacks into some areas of support, may look for that. Or if we get, I didn't really love the way this kind of failed here. If we get like a couple days of upside and then pullbacks, very interested in some long side continuations against the US dollar. Long story short, most currencies against the US dollar look weak to me right now. So I'm probably going to be trying to find dollar shorts unless things change dramatically with the CPI report. By the way, a quick plug here. If you are not already inside of our VIP Discord, Currently, you can get access to everything that we share inside of the chat room for a 40% off discount. There's a link in the description down below, but let me show you what that is all about here. So if I go back to my view, you can see some of the trade examples. So that Russell trade that I'm in, or any Forex trades that I take, any commodities trades, I'm very active in here. We're taking plenty of trades. If that's something that would be beneficial to you, if you'd like to get signals anytime I take positions, there's a link and a promo code in the description down below. Use that promo code YTVIP to get 40% off the VIP group. That is our biggest discount that we do all year long. So if you're looking for a very quality chat room, if you're looking for access to trade signals, coaching webinars, educational resources, if that would be something beneficial to you, take a second to explore the VIP membership down below in the description, and I look forward to meeting some of you guys in there. We've had a couple of people join already, which is great. So if you'd like to come join the ranks, be a part of our community, we'd love to have you. So let's keep moving on here. When it comes to gold, that's going to be our next topic here. Pulling up gold. So had a bit of a sell-off on gold on Friday. So if we pull up gold on the daily chart, we are still in a range-bound market here. I'm not super in love with the price action of gold at this time. You can see we had rejection here, and then now kind of ending out on Friday, just pulling back down to this level of support that we found. Looking left, this 3280 level has been acting as support the last 2 weeks or so. So we'll see. I mean, to me, the only area I'd be interested in gold on the long side would be a push down into this 3240 to 3200 range. And then, of course, on a longer term perspective, if we get like a bigger weekly chart pullback, that might be a longer term play for me. But from an active trading perspective, I am still neutral on gold. I was briefly bullish this past week, but the NFP report kind of put me back into neutral camp. We had a strong NFP compared to expectations. It wasn't a blowout NFP report, but it wasn't. It was enough to soothe the market, and I also think it's worth noting for those who are currency traders and or gold traders. This chart's really useful for gold traders because it gives you an idea of like generally how strong are various currencies relative to expectations, which is a kind of a global economic surprise meter, which, by the way, that is coming for this tool. We have had a lot of positive feedback to this tool. We have a tool coming that will combine the scores of all this and give you something to kind of show you the general overall global surprise meter of economies, which will be excellent for trading gold, because if global economies are looking stronger, like we're seeing several of these things getting some pretty good readings compared to expectations in terms of economic data, that would suggest a little bit more weakness for gold, right? As economic security is not particularly bullish for gold, which I think was part of the reason we sold off on Friday. We had that better than expected NFP report, and wage growth was good. Unemployment rate remained. I mean, it was a good NFP report. It was what the market needed to kind of relax a little bit and continue to push higher. I'm talking about specifically the stock market index, but gold, of course, took a plunge on that data. In fact, we can get a little bit more granular. Take a look at the 15-minute chart, and you can see there's that NFP report coming in right around here, and you can see we pretty much trailed off for the rest of that Friday trading action. So to me, it's pretty clear the market kind of took Friday as a, hey, things look okay economically speaking, and gold took a plunge for that. You can also see that in the 10-year yield, which pushed higher here as people said, yeah, U.S. economy looks like it's holding up pretty well, and they sold bonds essentially and started buying stocks. That's the story of Friday. Pretty much everything got sold and went right into stocks. Right, so if you were in bonds, if you were in gold, those things got sold in favor of the U.S. dollar, and of course gold, stocks. So gold took a plunge on Friday. I don't see this thing. So here's my take on gold right now. I still don't see gold making a substantial move in either direction. People have been asking me, Nick, what are the thoughts on gold? I get that question all the time. And sometimes I have a very boring answer where I just think, I think prices could come down or prices could come up, but I don't see them, right? And this is where I do get a little bit more of an obvious answer or a strong answer, right? I don't see the market making a massive move higher, right? I don't really really see that happening, at least at this time, barring some sort of surprise over the weekend or some big economic or geopolitical event. And I don't really see a big move lower either. So I don't see these moves very likely. And if you're an options trader, you can express this idea even if you wanted to place a trade, for example, by selling a strangle options strategy position, which is essentially where you sell calls and you buy and you sell puts, basically saying the market you think is going to go sideways. Both of those options would expire worthless. You can play that volatility or that lack of volatility, right? If you think the market's not going to make a big move, I've looked into that as a possible trade for the coming weeks, so I'll watch that. But for me right now, I don't really see a huge move. If we had a massive slide in gold, I'd probably buy some just for the longer term, but really no strong positioning here. And we can see that in the Edgefinder's top setups page. We talked about this a second ago. We'll take a look at oil in a second, but gold getting a neutral reading. PMIs were weak. That was bullish for gold, but then you had strong jobs data towards the end of the week that kind of saved the day for the market. Now, had we gotten, let me just put it this way, if we had gotten a really bad NFP report, yeah, I'd be looking to buy gold. But we just didn't get that. We got a pretty decent jobs data report. One thing that stuck out to me in the jobs report was specifically wage growth is still holding up, right? So you have these data points that are coming in, like wage growth year over year, 3.9%. Think about this for a second. If you want to tell me the economy looks absolutely horrible and people are getting 3.9% in wage growth on average in the United States, but then the CPI is 2.3%, right? So people's inflation, or people experiencing this amount of inflation but getting much more on average increases in wage growth, that's positive. That's a very constructive story, right? This was not always the case. A couple of years ago, people might have been getting, let's say they were getting 4% increases on their wages, but inflation was like 6% or 5%. Yeah, that hurts, right? Because then you're actively losing money just because, or you're losing purchasing power faster than you're getting a wage increase. That does not feel good. And so that was an ugly circumstance. But now we get a much better picture where people on average are getting faster wage increases, not massive wage increases. 3.9%, however, is pretty competitive. That's a pretty strong, the payments for labor are still relatively strong. And so that's a good sign. That's good for the consumer because then people are out there and they're spending money, which we can see in our economic growth. Let's go to retail sales, right? So retail sales consistently last two times, right? Had higher than expected retail sales growth on a month-over-month basis. We will get that data coming up soon, a fresh round here in June. So I'm very curious to see what that goes. But this is what I'm telling you guys is, a lot of traders, we know this, right? We talk about this all the time on the channel. They focus only on the technical chart patterns and they love them. And that is the technical analysis, retail trading favorite. They just love their technical analysis. But many traders will ignore things like what we just got done discussing. We're analyzing real market facts, right? The consumer, are they out there spending? Seems like they are, more than people expected, right? Here's your forecasts. The red dots are your forecasts, and the blue graphs are what actually showed up. We had strong retail sales relative to expectations. We have wage growth that's outpacing inflation. I mean, these are real forces that drive these markets. That's why I think gold has kind of taken a pause here, is because the economic data has come in relatively okay compared to what people thought it would. So that is why, gold sort of flatline, kind of moving back and forth. And, the dollar index is kind of staying flat here. It's not making a big move in one direction or the other. I think the big reason for that is that tariffs are still a big question mark for this. If you get tariffs that are constructive deals coming up in the next few weeks, I think the dollar could actually rally back a little bit. And if anything worsens or materially breaks down, the dollar index may continue its downtrend that we've had this year. So we'll see. But really interesting stuff on that front. I want to take a look at oil here as well because I just got done discussing it. We had a really big breakout on Friday. Check this out. big move higher on Friday, and oil is top of mind for me going into this week. This is another setup that I really like. If we go to our top setups page, U.S. oil is getting a +6 reading. That is a confirmation for me to look for some possible longs. And looks like institutional money also bought this one. So let me just pull that up, go institutional COT data. And what we can see here is that, yep, we got a little bit of accumulation here. Change in long contracts did increase in the previous week. Small increase in short contracts, but much more sizable increase in longs. So COT data looks good for oil. Breakout here on technical basis. I love this setup. I think there's a really nice risk to reward scenario here. So if we get something like this in the coming week, I'm going to probably look to get long oil. And like I said earlier with the VIP group, if I take any trades, you will get notified within the group. By the way, just a quick plug, if you are not already in that VIP group, like I said, the VIP room is 40% off using the link in the description down below with that promo code YTVIP. And if you're looking for a better brokerage, check them out down below in the description. I have several deals that we've worked out with different brokerages for you guys. So if you use specifically the links in the description, there are some really special perks that come with that. The other way to find great perks is go to a1trading.com, click on brokers right here. And what you can see here is when you do that, we have countries or brokers by country. And when you go through there are several great special offers for people of different countries. So if you're looking for a better brokerage, check them out down below in the description or head over to a1trading.com/brokers. Thank you guys for watching. Have a great week ahead.